This one from Reuters. Gold ETFs could see outflows rising on bets that the Fed will tighten monetary policy. Here it says ETF flows are closely linked to U.S. monetary policy as reflected in the buying and selling of physically backed products. This is an analyst here. While recent inflows suggest selling pressure may be easing, ETF demand is likely to remain less supportive than it was in 2025, analysts at ING said. So we already talked about your outlook for gold, but I just want to bring this to ETFs in particular. If it's indeed true that we have a less supportive environment for gold ETFs in particular, does that have any impact on the underlying price itself, or is that a reflection of the underlying price moves? How do ETF demand, basically, how does ETF demand impact spot price gold?
There are traditional gold investors who invest in the gold ETFs, but if you look at the ETFs and say, well, this is what gold investors are doing, you're misreading the gold market, because ETF investors only represent probably about 10% of the global physical gold market. And that other 90% is much more important on a long-term basis and tells you where it's going. So we look at that. I'm sorry for all that preamble, but to answer your question, we look at trends in gold ETFs as a short-term indicator. We saw it rising September through January, and we said this is bullish. We've seen it declining since January, mostly in May and June. That's bearish. And our expectation is that when the economic and political environment starts being perceived by the financial market consensus as being more hostile after August, we think that gold ETF investors will return. They're very opportunistic.